Great, thank you very much for coming. In this session, we're going to discuss in this session why it's difficult for startups to scale in the UK. And we've got a couple of distinguished guests on the panel. I'll just briefly introduce them. Alan Chang, to my immediate right, is the co-founder and CEO of Fuse, a renewable energy company whose mission is to help the world transition to energy abundance. Before Fuse, Alan held key leadership roles at Revolut, including Chief Revenue Officer, and played a major part in scaling Revolut into a global fintech giant. And to my further right, James Wise. James joined Balderton, an investment company, in 2013 and became a partner in 2016. He invests in AI, energy, productivity, and health, and sits on numerous boards, including Sophia Genetics, Depop, Tibber, and Go Cardless. He also advises the UK government on infrastructure investment and serves on the investment committee for Christchurch, Oxford. So I'll start with each of you in turn, maybe Alan first. Alan, why do startups in the UK find it difficult to scale?
That's such a loaded question. I think there's various reasons, right? Obviously, it also depends on industry, but maybe I can just speak from experience from both finance and energy, right?
Please.
I think the first is basically overregulation, excessive regulation, right? Let's start with energy, right? There is, if I want to build a utility scale site, I first need to do, get planning approval. And to get planning approved, I need to do a bunch of environmental surveys, include, for example, a winterbird survey. And a winterbird survey is, what you have to do is you have to pay someone with a clipboard and count number of birds, go to that site, and every winter count number of birds for 2-3 years. You just wait, and then once you do this, environmental studies, or count number of newts, right? You then submit to the council, hoping that's satisfactory, and sometimes that's not. And then once you get to that stage, you can be challenged, right, by maybe one person from a local community, and they can go to a judicial review, and you can be stuck in judicial hell for many years. So to build anything in energy, it's super difficult, even if it's a very, very simple solar site. In finance, basically the financial regulator is very, very cautious. I'll say overly cautious. I think most people can read on the news that it took Revolut, many, many years to get a UK banking license. It was the only real challenger in this country, and is probably the only breakout success from this country, as a startup. And basically it's just everyone's trying to cover the ass, and not there's no one, trying to basically okay, I'm just gonna do it, right? Because no one wants to be seen to be giving a license to someone who is might do bad things in the future, right? So they'd rather not see the economy grow as opposed to just giving that approval. So ultimately I'll say over-regulation and illogical regulation is what stifles, at least from the two industries I've been in.
Okay, helpful. James, same question.
Yes, I'm going to start with what it isn't, because there's a very strong cultural, almost meme now within the UK that Brits aren't ambitious enough. And I was at an event about 2 weeks ago with a very senior cabinet minister who said, we have all the ingredients here in Britain, we just need Brits to be more ambitious and go for it. And I thought, what complete rubbish, it drives me mad. We have absolutely zero lack of ambition. There's role modeling and everything else that could be better. But rather, you can go industry by industry, and Alan is abnormal in that he's gone after two of the hardest industries to innovate in, finance and energy. But you can go industry and identify specific regulatory challenges, which we can go into. But I would say more importantly, at almost every level of your life in Britain, there is a disincentive to build and scale a company. So you're 18 years old, you want to go to university, we'll give you 50 grand to do that in a sort of repayable loan. Oh, you want to start a business, there's no money for that. You go through university and you want to study in a novel area, you want to forecast, the weather, or you want to do something novel in AI. 90% of the resources available to you don't come from a commercial outlet or even the government. 90% of those resources are controlled by the professors at the universities, right? Giving you lab space or saying you can do this PhD with a grant. You do your PhD, you study a novel science, you come up with something innovative, you try getting funding for that. Banks literally, some people talk about political debanking in the UK, and Nigel Farage made this big deal about him being debanked. Thousands, if not tens of thousands of entrepreneurs a year are debanked in this country. They just have their bank accounts taken off them because of the way that we've punished banks for taking risk historically. And then, you're an entrepreneur, you want to scale your business, try getting a mortgage, try getting a personal loan, try paying anything which requires some kind of steady salary, because entrepreneurship is volatile. And in this country, you get punished. So there's plenty of specific regulatory stuff and lots of solutions to that. But actually, it's a more fundamental approach we have as a society to disincentivize people to scale a business.
Alan, could you speak a bit about your experience at Revolut, which, as we were just discussing, is one of the breakout successes of the past 10 years in UK business. What do you think that Revolut has got right that many other businesses haven't?
I would say, I think several things. First of all is always, ultimately, I'll say if I had to name one person that I should, success to one person, it'll be Nikolai, right? He's always pushing
the founder and CEO.
Yeah, the founder and CEO. He's always pushing everyone to be the best of themselves. He always, one of the cultural values which I also took to views is never settle, right? Never settle being, if you're not number one, that's not good enough. Mm-hmm. And this is both in terms of speed, in quality. But I'll say he's assembled a great team around him. Basically, effectively, is an execution machine, right? And Revolut at any given time is taking 20, 30 bets. And it's okay if, 90% of them don't fail. As long as 10% of them succeed, then it's a breakout success, right? And yeah, Revolut's now in over 50 countries. So yeah, I think it's just always pushing, never settle for anything less than number one, and having a great team.
And I guess if Revolut's been successful, that implies that at least the regulation within the finance sector was such that success was possible. Whereas we're kind of saying that in some other industries, that's maybe not the case. You mentioned energy is very challenging for Fuse. So do you think that there's something that we should all be taking from the FCA, from the finance system, that it's getting right when it comes to regulation? Maybe a question for each of you in turn.
Yeah, ultimately, just because it's a success doesn't mean it couldn't have been better, right? Today, it's worth 45 billion. If maybe FCA gave Revolut the banking license 4 years earlier, it would be 100 billion, right? So that just because you're number one doesn't mean you couldn't have been better, right? I think the mindset should be, the mindset is we want to be the best we can, and ultimately, what we're doing is we're just navigating these complex regulations, and we hire really good people who can do that, but doesn't mean these complex regulations make sense, right?
Yeah, I would go further than that. So, well, first of all, I'll note that Alan didn't say Revolut's investors. We're the first investors in Revolut and Fuse, but you're right to not say it's the investors that make a difference, because you really don't. But I would go further to say that, Revolut's been massively held back by regulations in the UK. And we often, and I think rightly, talk about the FCA sandbox and how it allowed a lot of e-money businesses to get going. So Monzo and Revolut and others in InsurTech and other areas of investors in Nutmeg and Go Cardless all benefited from that. But it's a sandbox. It was designed for experimentation. And then you get out of the sandbox and you say, right, we want to scale a real business here. And they go, whoa. Are you trying to be successful? That's mad, right? So mortgages. Mortgages are a completely broken system in the UK. It's such a painful and poor process. If you let Revolut, and we hope one day it may be possible, design and provide mortgages. And the same for Monzo and other companies. I think it completely changed the mortgage industry in the UK, which is one of the biggest financial assets in the UK. And we don't let them do it. Revolut's not allowed to do that. Same with personal loans. So there's loads of areas actually where our most successful companies are being held back. And then people say, well, why are they leaving the country? And, which speaks to the first point I made. There are no lack of ambition amongst entrepreneurs based in Britain. The problem is they may have to leave the country to, succeed in the field they want to be in.
Alan, would you accept that there is no lack of ambition in Britain, that we don't have any cultural problems around innovation?
I personally doesn't. I think there is a problem.
Okay.
But you could have multiple problems, right?
Sure.
Like multiple things could be true at the same time.
How do you see the lack of ambition being expressed? Like, what's something you run into in your day-to-day where you think?
I mean, for me, it's like, okay, so imagine this, right? Imagine if you're trying to do, something, right? Let's say you're trying to, I don't know, mail something, right, in the post office. Mm-hmm. You try one day, post office closed. Okay, you try a second day, post office is closed again. Then at some point you just give up, right? Mm-hmm. So I think, a lot of the attribution from the lack of ambition comes from, it's just very hard to build things in this country, right? Like you keep trying, at some point you just give up, right? Or you leave.
Yeah. Cultural problem, James, then seems obvious. It's a whole society thing.
Yeah, I'm as I said, I'm slightly more optimistic about the underlying ambition of people in the UK. We are early tech adopters. We're very entrepreneurial. There's lots of people who, lead the world in academia and finance. We've got fashion and music and film. So where we're allowed to scale, we do. And also, by the way, if you look at the unicorn founders in the US, so founders of businesses worth on paper at least $1 billion or more, over 50% of those people weren't born in the US. They went to the US, right? And UK is disproportionately represented when it comes to founders in America, great software businesses. So I don't think there is like a hugely challenging cultural issue, although it could be improved. It's more incentives. So, let's say 40, I don't know the number, but 30, 40% of the country are employed in some way by the state, right? What is your incentive? Mostly, you're hoping for pay increases in line with inflation. Right, that for the average civil servant, that is the best they can hope for each year. Right, that is the incentive they're given. Right, cause enough trouble or complain enough, and you'll get a pay rise in line with incentive. It's not necessarily outcome driven. And so there's a bunch of these things within structures within society, which may be well-meaning and maybe because of cost reasons inevitable. But actually, it's the incentive systems we give people rather than as a culture. For example, compared to other cultures, you may point to other cultures across the world. Japanese cultures, arguably, once again, generic thing to say, more deferential. I don't think we have that problem necessarily in the UK. There are cultures where taking any kind of risk culturally is not acceptable. I don't think we have that problem in the UK. We've got lots of people who take risks culturally. So there is a fundamental base there. There's just lots of structures that we live through which don't always allow it to flourish.
Got it. So just some stats maybe to put some, wider context in this conversation. So a survey from the Entrepreneurs Network, where they surveyed founders about their sort of attitudes to government, does government help them, found that only 4% of founders thought that the government understood the needs of entrepreneurs. So maybe each of you in turn, what are we've got some policymakers in the room, some politicians at this conference. What are some specific things that you would like the government to address to make it easier for startups to scale in the UK?
Get out of the way.
How so? What areas?
Delete excessive regulation.
So you mentioned environmental surveys.
As one example, yes.
Okay. And when it comes to payroll and tax, does that feature much in your calculations?
Yeah, for sure. I mean, basically, for me, formula is very simple. Delete excessive regulation, lower taxes, economy will grow.
Okay. James, same question to you, specific.
Yeah, look, I recognise there's some political constraints on some areas of deregulation, sure, as well as tax manipulation. But I agree with Alan that there's in each industry there are different types of blockers, and there's some sort of horizontal challenges that we have. Tax being one of them. Once again, it's great as a VC because we stand behind our founders invisibly, as you can see from the being up here. I think. you can go back, historically and say, what's the government done well? And you can point to specific interventions that have worked horizontally. So the SEIS, EIS scheme is often pointed to correctly as a way to incentivize angel investing, but there's heavy caps on that. R&D expenditure, tax credits for R&D can be pointed to, and you can say, look, there are excesses and there's some fraud in there. 100% that's the case. But you can literally look at that policy and chart the takeoff of various industries because they were given that extra leeway. So there's very clear levers you can pull around taxation and incentivization of both investing and scaling, in particular technology businesses. And you can correlate that to more business creation, and in particular, in the UK's case, some very good numbers for our size of country, large software businesses. So there's plenty of specific incentive stuff. But I'll go back to the first point, which is availability of finance at every stage of your life is really important when you think about the direction of travel you want to go in. And I think there is a fundamental lack of that for people wanting to start a business still.
Maybe let's lean into that finance point. So there's lots of chit chat in the press regularly, claiming at least that startups find it difficult to raise money at that kind of later stage before they go public, perhaps, but where they just need, a lot of capital for whatever their needs are when they're scaling the business. Do you think that that's correct, first of all? And if it's true, how do we solve that problem? Because it's obviously a great shame for the UK if a company decides that needs to leave and go to the US for the simple reason that cash isn't available. It was mentioned in an earlier session that this country historically has been very open to lots of money flowing in and out. It seems an odd problem for us to have developed. So do you think this is true? How can we fix it?
Yeah, so there's not necessarily a lack of capital globally available. And if you're a great entrepreneur, you're building a great business out of the UK, you have to think globally. Like I really have a challenge with sort of petty nationalism, being like they need to stay here and hire people here and raise money from Brits, because actually, we're not that big a country. There's only a couple of domestic markets where you can build a $100 billion business in the UK, and so fundamentally, to be successful, you have to go global from day one, which means hiring people internationally. It means moving internationally, opening up offices, and ultimately raising internationally. So actually, if you look at the availability of capital in the UK in terms of venture capital, it's increased tenfold in the 15 years that I've been in venture, which is great. And there's probably some further to go, in particular at the earlier stages. At the later stages, you could argue that there's a lack of capital, in particular for frontier technology businesses, so deep tech businesses. And you can plot that out. Areas like medical devices, life sciences, there's definitely a lack of capital. But it's not necessarily a lack of international capital. It's like a British capital. And, it's probably overtrodden space, but we talk about a lot in the UK about pension allocation to high-risk assets. Yesterday, I was at London Civ, which is the group of London boroughs who've pulled resources from their pensions to invest in assets. And they were talking about wind farms being risky because we only have 30 years of data. It's astonishing. So, how on earth are we going to encourage these people to invest in AI? We've got 4 or 5 years of data at the most. So there is a challenge at that later stage for British-based capital, but where British pension funds miss out, Ontario Teachers, SoftBank, there's plenty of big funds willing to step in.
I want to move to audience questions in just a moment, so please be thinking of a question for our panel. But Alan, same question to you. Do you think this is a problem? And if so, what can we do to actually address it?
I think there's too much money.
How so?
I mean, there's more money chasing good companies than good companies.
So if that's the case, how do you think we can increase the supply of
I don't think that's a problem.
So you think there's, let me get this right, so too much capital funding per businesses, but there are a small number of good businesses who deserve the capital.
I think good businesses already have too much capital chasing them. I don't think they need more money. If you increase the money supply for venture today, I don't think you'll get more outcomes.
Then I assume you want to see more startups, though. Do you think there's any way we can increase the supply? It's just fixed permanently.
Just delete regulation.
And therefore attract more people into the space. Yeah. Cool. Okay. The Slido is up on the screen. You may want to come back on some of those points. But please also raise your hand. I'm not sure if there's a mic. There's a mic. Maybe Jamie at the very back.
American companies, for instance, not only do they have a bigger market to sell into, but they also have a higher quality market to sell into. Their customers respond more quickly. They write. Thank you. They write feedback more regularly. They sign contracts. They have bigger budgets. They expend their budgets more readily. They have more discretion over it. So it feels like there's a piece to that of that. there being a more challenging market to sell into from a quality perspective in the UK. And that's been my experience. And I wondered if you could share any stories of that or dissuade me of.
Yeah, so on the consumer side, I don't think there is. So the UK population we were the fastest adopters of neobanks, we're the fastest adopters of e-commerce. I think outside of Norway, with the highest users per capita of ChatGPT in Europe. And so we actually have a relatively, for the size of the country and everything else, a relatively tech-forward populace and a relatively tech-savvy one. So that's a good news because people want to buy apps and tools, or at least try them. At a corporate level, I see that, right? I sit on the board of companies selling software to large corporates, and you look at the demand, in particular for this new wave of AI tools. It is astonishing the willingness from the CEO down in the US to say, we're buying this, we're redoing everything, throw it all out, build it anew. Actually, we were just having a discussion, Felix, here on some of those challenges in the go-to-market in the US. So there is that. But, to defend UK businesses, higher corporation tax, VAT, increased national insurance, there are burdens on building a company in the UK where you're just like, well, am I going to spend that incremental pound on a high-risk software project, or am I going to have to reinvest it into, the enforced apprenticeship scheme I have to put money into, which isn't used? To give an unfair example, because I think the apprenticeship scheme is probably good, but there's all of these things weighing on you as a corporate, which probably does hamper you. And look, once again, we can complain about it, and there's room for improvement. We're a much smaller market, right? So actually, what I want when I meet entrepreneurs in the UK, at least, is for them from day one to say, I'm going to sell to Rolls-Royce and Dyson and everyone, and Tesco, sure, and Ocado. I want to sell to those people. But actually, they're a small part of the global market. And what I want to do is sell to everyone in the S&P 500, a handful of which were businesses started in the UK.
Alan, do you think there's a demand problem where people don't sort of want to buy from startups the way they maybe should in the US?
I mean, I agree with what James said. But also, I think Americans are just richer, right? I mean, that's that. Otherwise, I don't think so.
Got it. I'll let Slido keep running, and maybe another question from the floor. James at the back.
Thanks. Question probably for James Wise. Obviously, you're talking about scaling up and startups, and you run Balderton. You're talking about billion-dollar bets and unicorns. What about the massive seam of companies where the enterprise value is going to be between, 50 and 250 million pounds, which are going to provide far more jobs and potentially as much, if not more, growth than our massive billion-dollar bets? Like, how's your answer any different?
Yeah, so I actually think it's more extreme when you're running that scale of company, right? So the thing about venture capital and venture-backed companies is we provide capital for people to take huge risks. So it's the incremental pound lost isn't actually as expensive when you're venture-backed, right? Because we give people capital to run at a loss to scale quicker. But we are a tiny part of the market, right? Maybe venture-backed companies are over impactful in terms of their role in the economy, but they're still a tiny part of the market. It's exactly that smaller business that I think is under the quash when it comes to scaling, more so than anyone else, because the availability of capital isn't there for them to do it. They have to run profitably, and there's so many weights put on them. So a lot of the same things apply, but there's an additional thing, I think. In the Treasury, in my experience of the Treasury at least, they do not believe in smaller businesses. By which I mean, they talk a lot about growth, we want unicorns and stuff like that, but a lot of Treasury orthodoxy and economic orthodoxy is smaller businesses are lower productivity. And so actually what you want is 20 Tesco's and 20 Revoluts, and that's your country done. That's all good, right? And all of these small businesses are dragging us down. They're low productivity. They're not dispersing information and IP and everything else in the way they want them to. And I think it's wrong for two reasons. One is I think the economics is no longer the case. Like, you can be a much smaller business where you can be much more high productivity thanks to AI and new tools and everything else. So one, I think economically they're probably wrong. But secondly, I think they are missing a fact, which I strongly believe, which is more people will have to be entrepreneurs. More people will have to run these kind of businesses where they're, employing 10, 20, 50 people, because large organizations are going to employ fewer people going forward. Once again, the shift between capital and labor is probably going more and more in capital's direction. There's going to be less demand for these large organizations to use labor as a whole, especially for the kind of service economy stuff we're pretty good at in the UK. And so more people are going to have to start businesses, and they're going to be more small ones. So even if we think they're lower productivity today and the Treasury doesn't like them, we're going to have to help them, because that's inevitably and existentially the direction of travel for employment. So all of the same restrictions apply, and they're greater because they don't have the availability of VC to take risks.
Just briefly from the slide out, I think several people have asked the same question, which is, what is one specific regulation that you would want to change? So maybe starting with Alan, I know you said delete regulations. Is there something specific that you think if you could be king for one day, that's what you would change?
Planning.
What in particular? You mentioned bird surveys. So.
I think I forgot the specific plan. It's like the Town and Planning Act of 1945, something like that.
Yes,
I think it was referenced in the Foundation's article.
That's right.
I think that's the one I'll delete.
Okay, got it.
Because ultimately, like, if you want to build anything physical, you must go for that.
Have you seen variation in how the UK handles planning and building things versus other jurisdictions as you're expanding the business?
Yeah, I mean, for sure, right? I mean, if you go to China, if you go to UAE, you just see construction everywhere, right? Whether it's, buildings, skyscrapers, data centers, energy sites, it's just construction everywhere. It's so hard to build anything physical in this country.
Yeah. James, same question.
Yeah, I probably am a subscriber to the planning theory of everything, as I think a lot of people here are. So, but not to just to have something different to what Alan said. I would change the student loan company into the small business company, and I'd say every single individual in the country can either, as they can now, take 50 grand, only half of which is ever paid back, to go and study. Or you can have 50 grand to start a business. And if my bet would be that more than 50% of that is paid back, even if we lose money on that 50 grand, as COVID loans and everything else have proven that you can make money on it. But let's say you lose money on it. I think that the fundamental economic and more importantly, the entrepreneurial base of the UK will be improved.
Okay. I want to come back to the floor. Please, hands up again. Adi.
Thank you guys for a great talk. I have two questions, one for Alan specifically, and then one for both, or like all of you. It feels like a lot of the great UK companies originally built a lot of their business on exporting, and you don't have enough of a domestic market here to have like a $10, $100 billion business. Do you think that it's the case that UK businesses are good at scaling domestically, but then struggle to export, struggle to scale internationally? What did Revolut do that let it scale to 50 countries? Why do most companies fail to do that? And then for Alan specifically, many of your Revolut friends have now spun out, right, and have their own companies. Are many of them leaving? Who has done well? Who has done badly? Which sectors have done well? Which sectors have done badly? Are there any trends that you see from like all these spin outs?
James, do you want to?
So on the latter point, I think we've invested in 6 teams that have spun out of Revolut so far, and we'd invest in many more. I think the great thing about the culture that Alan and Nikolai built there was it encouraged people to take responsibility and take ownership and ultimately turn people who are ambitious into high agency ambitious people. And as a result, generally, they're very good at starting companies. Unlike, for example, and I don't want to, we're on Chatham House rules? But anyway, it's fine as recorded. But I would say, for example, DeepMind, which is a great organization in the UK, phenomenal research, and the impact it's having will be, long lasting. But actually, DeepMind hasn't produced a bunch of people leaving and starting companies because they're really well paid researchers. They're not necessarily incentivized to take ownership and run a P&L and understand what hiring takes. So actually, Revolut is a huge asset to the UK, and there's great teams coming out of it. I love all the companies we invest in by default, so I can give you a list of all of them, and you should go and look at all of them. On the exporting side, look, Rolls-Royce, Dyson, we've got phenomenal businesses which export globally. So in particular, historically in engineering, software is a different case, right? Because it's a very different. You get very different economies of scale, and they're much more mobile as organizations. So one of the challenges I think we'll have as a small nation, where you have to think globally to be successful, is unlike Rolls-Royce, which has big factories they need to build everywhere. So if you've already got them in the UK and you've got the talent in the UK, you might as well stay here. If you're a software business, you can be much more fleet of foot. You're a bunch of people and cloud and compute. So one of my concerns going forward is how on earth do we hold on to those companies, even if they're going to be world leaders, and how do we create an environment to keep them here?
Got it. So Alan, the same questions, I guess. There's the export question. Why was Revolut able to do that in a way that other companies seem to struggle? And then your Revolut peers, what are they doing now? There was also a question on the board earlier speculating that a lot of people seem to be leaving the UK. So maybe you want to touch on some of those.
Yeah, I'd say I think it goes back to the team. I don't have ultimately a company is just a group of people, marching towards the same direction, building something, right? And if you think about what Revolut's doing today, right, is beyond just finance, right? It's also getting to travel, lifestyle, and in eSIMs, right? So I think ultimately what a company can do, right? Technically, the market size of a company is just is limited by the ambition, right, of the company, right? Especially from the leaders of the company, right? And I would say like I attribute again all back to Nikolai, right? His ambition is unbounded. So yeah, I think it's as simple as that.
And what about your peers from Revolut? Do you see how do they feel about the UK? Are they leaving because they seek ambition elsewhere? Are they staying because they think the UK is getting things right?
I mean, I would say it's really, really, really pushing it right now. I personally think the pros still slightly outweigh the cons, but it's very, very close to be the other way around.
When you talk to your friends, what are the things they say that's driving them away?
I can tell you, I have I know about 50 people, right, who are, say, like talented leaders in tech. Over half of them have left already.
And what kind of jurisdictions do they go to?
UAE and US.
And is it crime? Is it public services? Something else?
Everything.
Everything. Okay.
It's high taxes. You get your phone stolen. You get your car stolen. You wait, over a year to see a doctor.
Yeah.
Like, what's the point? Like, I would say there's one big pro in the UK that's makes me personally want to stay here is talent, low cost talent.
Yeah.
Like you hire very, very good people for 1/3 of the price compared to the Americans. Right?
And you're not just saying that because I used to work for you. James, are you going to come back on that point?
He clearly wasn't paying you enough. He's just admitted. He should have got 3 times that. Yeah, so look, I think the numbers of people leaving the country are astonishing, right? Both anecdotally from people I work with and obviously in the numbers now you're seeing it. And it's a great shame. I think there's lots of elements to it. In addition, it's the direction of travel, right? The first budget that the new government with a super majority and this mandate for growth came up with was so negative on ambition, right? If you grow stuff, we're going to tax you. If you build stuff, we're going to stop you. If you make any money, we're going to take it off you. Or you want your kids to go to public school, well, we're going to make that more expensive. Like almost everything that you could list of all some good things that Britain has, like farming and agriculture and businesses and entrepreneurs and education, they basically said, not only are we going to make it more expensive and harder to do it, but the direction of travel is so negative, right? It's like, we are going to punish you for being ambitious in this country. That was if you read between the lines and above the oh, we want to be ambitious for Britain, that was the actual action. And I was on a phone call, actually, when there was a bunch of people after the budget. The Treasury, host these Zoom calls and meetings where they explain, what's going to happen to you. So I was on a Zoom call with about 30 VCs and tech investors the day after the budget with the number 10 business attaché. And he said, I'm sorry. It was literally, I'm sorry about this. And this is where we are as the UK. It's what we had to do. And I believe that they think that. And there's lots of justification for it, right? There's lots of parts of Britain that do need investment. There's lots of parts of Britain struggling. The taxes and everything else may be inevitable given our growth rate and pension overhangs and everything else. But it's not a good direction of travel. So you could have all of these burdens on you, but you could say as a leader in this country, we are going to do everything we can to make it easier. Right. And I think the one silver lining, I think, is on planning. Hopefully, we're seeing changes there. AI growth zones for all the marketing. Maybe there'll be something happening there. So there's like little chinks of light. But the general vibe out of the Treasury is not going to get better for you people. And when you don't even give people the hope that it's going to get easier, people will leave. And that's, it's a great shame.
Okay, time for a few more questions from the floor in our last 5 minutes. This gentleman here, maybe to start. And I'll take a couple more as well.
So does the panel agree with me that the idea that UK pension funds lack risk appetite and willingness to invest in scale-ups is in fact wrong? And that they're in fact being relatively rational in not investing in scale-ups because of so much regulation that it's better to put your money elsewhere and you get better returns? And in particular, this idea of the Mansion House rules that are changing to encourage pension funds to invest more in scale-ups is slightly misguided. And in fact, what should be happening is changing the regulation so that it's just more attractive to invest there. So you don't have to compel anyone to invest there. They'll want to invest there. And if I just give you a data point, so I've spoken to various local authority pension funds, and a few of them have told me that they do in fact invest in venture capital, just not in British venture capital.
Other questions? I think, Jacob, did you have your hand up?
Alan, you've come out publicly against nuclear power, at least in a context for Fuse. Could you talk more about that and whether that is something that is subject just because of the regulatory environment? We see in China and the UAE lots of new nuclear power being built. A lot of talk in the US. We'll see if it translates. Is that a permanent decision? Or is that something that could change?
Do you want to take that, Alan? Yeah, and we'll do the pension one with you. Yeah, thanks.
I would say you could definitely change, right? So, I mean, if you boil down nuclear power, right, it's basically a giant kettle, right? That's all it is, right? It's a very big kettle that you build once every 40 years. And like, as an engineering company, right, what you want to do is you want to keep building and iterating. Like, so if you think like in software terms, right, like you want to be making releases every day, right? Maybe multiple times a day, right? You release something new, you get customer feedback, you improve, and then you release again, and you keep iterating, right? And this is basically called learning rate. And as you get feedback, you improve the product, and then so on and so on. You want fast feedback loop. The problem with nuclear is, partly because of excessive regulation, but also due to the technology itself, right? Because obviously, like, we need some sort of nuclear regulation. We shouldn't be zero regulation, right? So basically, between we should probably between like what we have now, both in the UK and the US, versus I'll say what the right level of regulation should be. Like, we're probably like overshooting with it, but we should definitely not be zero, right? And even with the right regulation, right? Like, even if we get this right, the learning rate will never be as fast, right? For example, we need to ask, when you build a nuclear site, you need to be able to answer questions like, what if a plane hit the site? What happens then, right? And obviously, you need a good answer, right? So ultimately, you can't fundamentally, this technology you cannot build as fast as something like solar. You can get super fast learning rates in solar. If you look at cost of solar, it's been dropping like 10 to 30% year on year. Right? There's super fast learning rates. So I personally think, obviously, like, I'm sure most people in this room is like pro-nuclear, right? Like, I myself is pro-nuclear, right? We should definitely have some nuclear regulation reform, right? Where we cut down the excessive regulation. But ultimately, I would say, I don't think it would play such a big part in, I think it has a role to play in our energy grid, but probably not as big as most people think in this room, but not as small as what most other people outside of this room thinks, right?
Good point. We have a very short amount of time left, 1 to 2 minutes. James.
That's a real shame because pension reform is my specialist topic. But I think it's a phenomenal example of unforeseen second-order consequences of well-meaning Treasury policy. So we had in 2012-13, when we raised a fund, we had lots of UK pension funds, DB funds, right? So the coal miners' pension funds, BAE pension funds, Tesco's pension fund, were all investors. And that fund invested in lots of great British companies, and I think will do very well for them. And then direct contribution funds DC funds were created, and DB funds were no longer sort of able to raise capital. And these DC funds were really focused on lowering fees, get fees down. It's too much, these hedge fund and shareholders, stockbrokers are taking too much money off pensioners. And they completely wiped out the capability of UK pension funds to invest in UK venture anymore. So we used to be, or any venture, right? Whether it's Sequoia or A16Z or Chinese venture funds or us, they couldn't do it at all. And they still basically can't. And that wasn't the intention. The intention was to bring down fees for pensioners, but what they actually did was massively harm returns in the long run for individual pension holders, because they had to focus on short-term fees rather than long-term returns. And so now, when we have our LP days, our investor days, we can't show British coal miners' pensions improving. We show Ontario teachers and firemen and Danish civil servants because we've got the Danish Sovereign Wealth Fund. So there's loads of reasons why pension funds should invest in venture. Long-term returns, you can debate, they're very spread. The median is okay. the best returns are incredible, the worst returns are awful. So there is a reason to invest in venture. And you're right. I want them to. I don't care where they invest. If it's in the UK or the US or Brazilian venture funds, I want them to invest in equities, private equities, because I believe it's a really good long-term return for pension holders. And I'm on an endowment, a 500-year-old endowment, which is mostly funded by land Henry VII stole. But for the next 500 years, we can't rely on that. And so I'm pushing people to think about these long-term commitments. But the UK Treasury decided to change something 15 years ago, and the long-run effects have been terrible for UK venture. It's changing now, but the same thing is going to happen. The Mansion House reforms, I'm not in favor of mandating people to invest in anything. So, as far as I know, there isn't going to be a mandate, but they're setting up something called the LTAF, the Long-Term Asset Fund, which is the worst of all worlds. It's going to force people out of venture again, because it's got a 20% annual redemption, and you can't have 20% annual redemptions in venture. So there's every stage of the pension reform process, there's well-meaning people saying, let's do something good for pensioners, but almost always they end up with the worst of all worlds, because there's too many people trying to solve for X, and X may be impossible. Anyway, I could talk more about it, but there's people literally waving signs at the end saying, shut up.
They are, yes. We're unfortunately out of time. Please thank our panelists.